Greetings everyone and welcome to GPA Trading Services. We're so pleased you could join us for our lovely Sunday summer soiree trading event. We are your hosts and founders of GPA Trading Services, Gary and Trish Albrecht. And here we are on the beach. What better place to be in the warm summer? So here we are. Thought we'd share a fun summer pick. And we hope all of you are having a lovely summer. Now, tonight we're going to explore the markets, see what's going on, and get geared up for this week's trading. And we're going to do so while utilizing our wonderful, one-of-a-kind, state-of-the-art custom MPA PE3 software. So, before we begin, I'll turn it over to Gary, but I'd like to ask everyone to please sit back, relax, and enjoy. And if it's your first time joining us, welcome. You've got a lot of new and interesting things to behold, and those of you that have been with us before, welcome back. Always a pleasure to have you with us, okay? And if you have any questions, you can type them in, and I'll be happy to answer those for you. But in the interim, go ahead and sit back and relax and enjoy what Gary has to discuss with you. All right? Then I'll hand it over to him and he'll walk you through. Thank you so much.
Hello everyone. My name is Gary R. Albrecht, founder and CEO of GPA Trading Services. I'm also the mastermind and creator behind the Market Price Anticipator Premium Edition 3 software. I'm the instructor as well as the educator. Just a brief bio. Why should you take your time to listen to me tonight? Well, I've been a professional trader successfully for 20 plus years. I'm considered a technical analysis expert. I'm the creator of a one-of-a-kind custom trading software we're going to wow you with tonight. I'm also the founder of GPA Trading Services over 8 years ago. We've educated thousands of students around the globe. We've conducted live events, speaking engagement, platinum programs, one-on-one coaching, and mentorships. If you haven't had a chance to peruse our website, we welcome you to do so. A brief disclaimer, I will highlight a couple of points. Trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. A person should only use funds that they can afford to lose, that fits within their overall financial plan as developed by a qualified financial planner. We have specific rules we like to incorporate, never risking more than 2% of your entire account balance on any one given trade. For options traders, never risk more than 5% of your entire account balance on any one given options trade, and always adhere to strict, proper money management. Finally, all information in this presentation is for your education purposes and should not be taken as investment advice, nor as a recommendation or endorsement to buy or sell any specific investment. Basically, trade at your own risk. Standard disclaimers. So to begin with, we have some key components in anticipating future market conditions. I think it's a lot easier to trade when you know where stock, commodity, future, ETF, bond, whatever market you're trading. It's nice to know where it's going before you start trading it. And this software dictates and helps you decipher that information. First important is always support and resistance. You must be aware of support and resistance. And the software does it for you. Trend direction. What direction is the trend? Is it you're in a temporary pullback, or is the trend up but you're in a retracement, or you're starting from a retracement into a trend continuation? So the direction and the trend direction is very important. Now, where we utilize and we separate from everyone else, we utilize multiple time frames. And the key is to align those time frames together before trading. We like to call understanding how the lower time frames cycle within the larger time frames, and we call that our line of progression as the software plays out, almost like a quarterback reading the defense. They look at their first receiver and say, well, he's covered. I'll go to my secondary receiver or my third tertiary receiver, and eventually knows where the defense should or should not be, and he goes to his open receiver. Well, this is what the line of progression does. It's a line of progression as the time frames cycle up and down, and they give you where you should look to enter, where you should look to exit, etc., based on where you are within those cycles. Pretty simple. Now, just a graphic illustration of what aligning the time frames look like. This is a screenshot of oil in this case, and it's 3 different time frames: the monthly, the weekly, and the daily. And notice in our little demonstration, we have the monthly and overbought conditions. We have the weekly and overbought conditions. And we have the daily and overbought conditions. That's what we mean aligning the time frames together when your daily, your weekly, your monthly are oversold or overbought. And that's what we mean by aligning. Whether you're a scalper, a day trader, well, you'd use the lower time frame. If you're a position trader, long-term trader, use the higher time frames. And that's what you do. You align them. And following along with the term follow the line of progression, you'll notice what we mean by that. We're talking about when you know the time frames are aligned, like we're showing the same illustration from the weekly, and then what the daily is expecting the weekly to do. Well, this is where this comes in, where you have we have our 2 indicators we call the price action indicator and the trend momentum. And we combine these 2, and it's unlike any indicators ever created, because it does so many things and so much information is contained within these 2 simple indicators. First, when they're aligned in overbought conditions, you're expecting price is going to start to stair-step, decline in a stair-stepping fare lower. Well, how do you know that when one time frame is aligned? Well, you're basing it on the higher time frame aligning, and then you expect behavior of the lower time frame. So in other words, when we get what we like to call a PAI hook, where the process is just, watch my cursor, where it just turns and hooks. We call that a hook. And then on the trend momentum, we call it a cross, when it crosses from above to below, aka the green line crosses below the red, and eventually when the aqua line crosses below the yellow. But that's what we call a hook and a cross pattern, a PAI hook, TM cross for short. Now when I have that, my daily is going to exhibit very specific behavior. It's going to move from overbought and it's going to move to oversold. And then depending on how steep the slope, you'll notice we have a slope here, how steep the slope is and how much angle and separation open on the cross will dictate what the behavior of this daily is supposed to be. And because the monthly was down, the weekly was down, and the daily is overbought, you expect the daily to exhibit the following behavior. It will start off by topping and rolling from overbought to oversold. And then what does it do? Once it gets to oversold, it starts this process we like to call slingshotting. And that's where price starts to separate and then slingshot lower and then lower and lower. It repeats itself over and over the following weeks and months while you're following the direction of the higher time frame. So notice I'll just press this several more times. It's just showing how many times that daily continued to engage lower and lower and lower. And these are great entry points. You know, you hear the term, sell the rally in a downtrend. Well, you need a rally to sell. You need to understand you're in a downtrend, but the term is pretty simple. Sell the rally in a downtrend. Well, these slingshots give you exactly when you should be selling those rallies in the downtrend or when you should be buying the dips in an uptrend, depending on where you are in relation. And as you can see, price did exactly what we expected it would do. It started to move and stair-step its way lower and lower and lower. And as it did so, it kept the weekly pushing from overbought toward oversold. And the monthly went from overbought toward oversold. And that's why oil prices dropped so many, 10, 15, 20, 30, 40, $50. Depends on where you entered the trade. All right, so I think you're getting understanding of aligning the time frame. Here's just another brief example on a currency pair, pound dollar. Again, we had the monthly starting to bottom and reverse on the bottom side. The weekly was starting to bottom and reverse and go higher. The daily was bottoming and reversing. And the 4-hour was originally bottoming and reversing. But then you remember the topic we just discussed. When you know a daily is moving higher with a hook and a cross, that automatically means, Tony, my 4-hour is going to move from oversold towards overbought. And depending on how steep the slope and the angle and separation of that hook and cross pattern. The 4 hour is not only expected to go to overbought, but when it gets there, we're expecting it to slingshot higher and higher and higher while the daily continues to move. And this is simple because we see how this is often done. And we'll see it continues to slingshot several more times. So notice, from a monthly that was getting oversold starting to turn up, we began with a hook. The weekly gave us the hook and a cross pattern. A weekly hook and a cross pattern up means the daily is going to move from oversold all the way to overbought. Right? Just like I told you a moment ago, when a daily hooks and crosses, the 4 hour is going to go from oversold to overbought. When a weekly does a hook and a cross pattern, the daily will go from oversold to overbought. And when you get a monthly to finally hook and cross, which later was fulfilled in this trade, the weekly went all the way towards overbought. So it gives you weeks in advance, months in advance of the direction where price is expected to go. And then you'll be aware when the pullbacks occur, when the lower time frames start to top. Then when they slingshot back up, you buy the dip in the uptrend. So let's show you how this looks in real live trades. All right. I got a couple more of these real quick. Just another showing of gold. We trade everything in this class. Gold, futures, commodities, ETFs, bonds. And again, it's just aligning the time frame. So with gold, this was unique because yes, we were starting to depressurize, but we also started to pull back. And the bias was we were going to start to stair step higher. But before we did so, we needed to finish the down cycle because the daily was still moving down while we're waiting for the daily to finally reverse. So we were able to sell the slingshots in the daily downtrend up and until the daily turned and hooked. Then we started to buy the dips in the uptrend. And as you can see, gold started to rally significantly after the reversal of the time frames aligning across all time frames here: 4 hour, daily, weekly, and even monthly. All right, so that's a pretty simple explanation of aligning the time frame. And again, I'm just showing that when you're in a downtrend, you would expect the 4 hour to slingshot lower. So the daily finishes its cycle, then it reverses to go up, and then the 4 hour starts. You get a trigger, boom, you go along, and you're good to go. Hook and cross pattern, hook and cross pattern, hook and cross pattern, knowing this was going to continue for several 4 hour periods, several days because the daily was engaging, and also several weeks because the weekly was up. And this trend continued for quite some time, and we were able to bank significant profits. All right, so now let's go to the charts and start to look at real software in action. And we'll start off with our euro dollar to start, because it's the most commonly traded currency on the market. And I want to briefly give you an overview of the market conditions so then I can give you an idea why we believe where the euro is ultimately headed and how it's going to get there. So the euro is bouncing this morning, or wherever you are in the world this evening, and it's starting to climb a little bit. But the bias is not to go on and make new highs. The bias is we're in a corrective phase and we're going to end up with another lower high and a lower low, right? Well, how do I know how much higher this is going to go before I sell the rally? You wait for the time frames to get overbought. Then when they start that turn and hook process we call the hook and cross pattern, that's when you sell. Or you sell the slingshot, which is also a hook and cross pattern, and a slingshot engaging on one time frame will have a hook and cross pattern on that lower time frame. So it all fits in like a glove. Well, why do we think we're going to make a lower high and a lower low? Well, if you take a brief moment and look at the monthly time frame, you can see the euro dollar has been in a downtrend continuation mode for over 10 years. Ever since topping out, it started to make lower highs, right? We have a high to a low, to a lower high, to a lower low, to a lower high, to a lower low. And you say, well, that didn't quite make a new lower low, right? But yet it made another lower high, then a lower low, and another lower high, and another lower low. And we pegged this in our service. We told you this was going to go up substantially for months. And then when it finally topped over, you want to be on the short side of the euro. So our classmates and I have been short the euro for quite some time. Now we're dipping, stair-stepping lower with the monthly. And check it out, guys. We got a monthly hook, monthly cross, steep slope, angle and separation. So what did that tell you in the initial phase? That if I get a monthly hook and a cross, what would it dictate? It dictates the weekly is going to go from overbought all the way to oversold. So what did the weekly do as we started to top out? It went from overbought all the way to oversold, and now it's starting to depressurize, and the bias is because my monthly is down, this weekly will end up turning over. Watch the cursor. This is going to end up turning over and heading down in a slingshot lower. What is the slingshot? It's this little phenomenon here. And I won't go through exactly all of that now, but you learn everything you need to know and then some from A to Z. And not only during that in live class, I dictate just like I'm doing now. Watch for this red line to start to flatten out, and it's going to turn and hook. And price is going to fizzle manizzle as it's going higher. It's going to turn over and it's going to slingshot lower. Well, why is it depressurizing right now? Because my daily is moving from oversold, and it started that process, then it turned over and it's trying to slingshot higher at the moment. Well, this is good because the weekly is still trying to depressurize. So remember what we said, when a weekly starts to turn and hook and give you a hook and a cross, that means this daily should give us a few more days of upside pressure. Do we have the hook and a cross pattern up on the weekly? Well, beginning of the hook, this is depressurizing, but notice it's flat here. That's a subtlety, but it means we're likely to see this slingshot lower than we are the weekly to keep going all the way to overbought. That's why I believe we're going to see a lower high and a lower low. Simple as that, right? Well, what does that mean if I want to trade something else? Well, same with the euro. It doesn't matter what you trade. The software is exactly the same, whether I'm trading stocks, futures, commodities, ETFs, bonds, treasuries, anything you're trading. It's still the same based on the cycles and the cycling time frame, where they're located. So yes, look for the euro to climb a little bit more, but end up with a lower high and a lower low. Now I want to take you back to this visual picture on this chart because there's some very critical resistance level. This 1720 area, it looks like we were formerly support, turn resist, turn support, and it was resistance, and now it looks like we're starting to break above it. So what's the next level of interest? This previous high right there of 1848, 1.1848. Well, what if the euro breaks above 118.48? Then it changes our view, and likely this 4 here is not over. That's why I'm showing that it could continue if we break above 18.48. Well, what if the euro doesn't and that weekly ends up slingshotting lower and we come down and make a new low that's below this 18.48? Then we're going to go with this subdividing 4 going down in 5, and we're subdividing 1, 2, working on our way down 3, 4, 5, etc. Right? Well, what does that mean? That means I'm just going to follow the cycle. So James, if I want to scalp and all I care about is scalping, go, Gary, I don't care about the monthly and the weekly when they're aligning. Well, you will care after I show you how we trade this and why it's important to line the big boys. Because the big boys mean big trades, hundreds and hundreds, even thousands of pips. That's why you align the big boys. And then you continue to sell in that direction. So when my weekly is trying to depressurize against a monthly that is pushing lower, who you think is going to win the battle? Well, we go in class, and I'm not going to do it at the moment, but in class, I'll go through a 20, 30-minute explanation of, well, if the weekly does move where we don't expect it to, then look for this monthly to engage up. But while the weekly is depressurizing, if you don't see the monthly turn and change angle, and it just stays down, then that's a clear sign you need to keep selling 4-hour and daily slingshots, because the daily and the weekly that are starting to depressurize, they're going to slingshot lower and lower and lower. Right? That's what it does. And I could show you in thousands of examples in any symbol in any market. Same thing. All right, so my monthly's down, but my weekly's up. So as I told our students, we're expecting the euro to continue with this stair-stepping lower, and this little bit of a rally here should be met with a lower high and a lower low. And ultimately, you're going to see this weekly turn over and slingshot lower, as the cursor is illustrating. It's going to turn over and slingshot down. And price is going to go from that lower high to a lower low. Well, how do I know when this gets ready to start slingshotting? Well, that's where the daily comes in. We're not going to see that weekly start to slingshot and turn over until the daily finishes its cycle towards overbought, then cycles back down from overbought back toward oversold. So you can imagine what we're waiting for the weekly to engage down. What do I want to do? In the coming days, this is why you should join, because you'll have the software, and in the coming days you're going to see this daily move up, and then it's going to give you one of these hook patterns back down, right? And once it starts that little hook pattern, I know I want to sell the euro dollar and stay in it for several days, because the daily is likely not only to turn and hook, but it's likely to go up here, turn and hook, and then cycle all the way back to oversold. All right, so just in case you're not aware, this red line that's red up here, up at 80 on this first indicator, the PAI we call price action indicator, it becomes overbought when you reach that level. And then the green level for below here, down at the 20, means it's oversold when you go below the green level, aka color coded. When you're oversold, you're thinking about buying, that's why this line is green. And when it's overbought and you're thinking about selling, that's why this line up here is red. And in both indicators are the same, right? When this trend momentum gets above the red, it's considered overbought. And when the trend momentum gets below the green line, it's considered oversold. So it's easy to see that all I got to do is align these time frames to get the highest probability outcome. And yes, even though the euro grinds and grunts, you can hear them all like huffing and puffing trying to climb up a hill, it's going to continue to struggle. But yes, it could go higher because we want to finish that little cycle. But then when do we expect the weekly to start engaging back down? Remember, we said a moment ago this weekly was going to turn and hook and start heading lower. When will that take place? It's going to take place when the daily moves from overbought, starts to hook, and then cycles back to oversold. How do I know that? Because I can use a slingshot from the previous slingshot higher, or I can use an old slingshot to the downside and show you the same thing over and over. Every time this weekly went up and then slingshotted back down, my daily went from oversold to overbought so that the weekly could depressurize. Then the daily went from overbought back to oversold so the weekly would engage, right? So what's going to cause this to engage down and make price go from a lower high to a lower low? It's going to be the daily when it tops and rolls. So I say we're probably going to get a few more days as a chop, 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 up, down, sideways to upwards. And then we're going to look to sell that rally when the daily finishes its cycle. All right, now let's go to some other ones that I want to get you in on, because these are some great trades that are not only setting up, but they're ongoing trades. And we've been in numerous in the last several weeks and last several months. The pound odd. The pound odd, I'm going to show you the same thing over. This currency pair is up over 1,464 pips. Yes, for a while there we were up more and we're getting a little bit of a pullback, but the long term is this. And you go to your monthly. Long term, you see this monthly right here, and somebody would say, well, Gary, why do you think this is going to go much higher and not reverse and come all the way down and make some new lows? Well, look at the technical picture. You go back years ago, we've been starting to make lows, highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. During the latest massive pullback, what happened? We got a monthly hook and a cross, and it went down thousands of pips just riding the monthly cycle down, right? But since it bottomed and started to reverse, well, it bottomed and then tried to slingshot lower but made a higher low. We call that a slingshot that fails. Then it went on to depressurize and slingshot down again, right? I'm going to show you from the PAI. Starts to turn and gauge over, failed, made a higher low. When it turned and hooked out, that's a perfect buy time for this to scalp back up. And not only that, but James and others, when you see this little swing point high here, where this started to engage down from when we were engaging down, we knew when this turned and hooked out, I gave the class instructions that stay long and look for price to go back to that previous high and make a new high. Well, guess what? It repeated itself. It then came down to slingshot again lower. See it? Another time. And while this was moving low, I told everyone, look for it to go down, but make a higher low and expect that long before it did. Months in advance, I said, look for this to go down and then turn and hook back up. When it does, you see that swing point? You're going to go and buy long again, stay long until you see price go above this previous high and make a new high. Well, it engaged and disengaged again. What did it do? It went back to the previous high where it started to engage. When it turned and hooked back out, it went back to the previous high and made a new high. Well, guess what? We're engaging down again from this swing point. And guess what? When this turns and hooks out, which it will, see this blue and green right here? Blue and red? They're going to come down and then turn and hook out, similar to what you saw over there. Turn and hook out. Watch the cursor. They're down and they're going to turn and hook back up. Well, guess what? Whenever I see this turn and hook back up, I'm going to be targeting that swing point high and expect prices are going to rally and go on and make a new high. All right? So this is just the rationale. Why am I in this trade and why did I let it go to 2,000, take some profits and then pull back and not close it because it was going to pull back? Well, this is for teaching purposes. Certainly you can maximize this, but I just know this is going to make a higher low and another higher high. So why close it prematurely? Because it might pull against me for a while. I'm expecting it. I've been expecting it for months now because we're turning over. But check it out. The weekly is getting exhausted, and as it's moving from overbought toward oversold, yes, I expect this pound odd will continue this sideways to maybe a little bit lower. And for those who use that Ichimoku, this Ichimoku is different than normal Ichimoku because it's tied in with the indicators. So once this weekly finishes its down cycle, see it turning back over? I'm going to look for the pound odd to give us a little bit more sideways to lower movement, but end up with a higher low, higher high as it reverses. And as this finishes the cycle in a couple of 2 to 3 weeks, I'm going to look for this to turn back up. And when it does, I want to buy and go back long because this should go back from, say, 1,1200 range back to 2,000 and above in the next several months. Well, why is a weekly turning over expecting the monthly is going to disengage? It will when this weekly finishes the cycle, like it did over here. When it finished the cycle down and then reversed up and cycled all the way to overbought, that's when the monthly was engaging, disengage. And notice each time, this is the beauty of the software. Pretty simple. Well, when you're in a strong trend, the slingshot phenomenon, people say oscillating indicators are the worst thing for trending markets. They work when they're oscillating and you're in a contracting market, staying in a sideways market, but they definitely don't work in a trending market. Well, when you marry the PAI and the trend momentum with the slingshot phenomenon, believe me, this is the most accurate of long-term trend trading there is. And then we start to look for signs and symptoms of what these cycling time frames would exhibit. And all this monthly is showing you after this long slingshot lower, 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 it reversed and went all the way back up. And the bias is as it came back down, it would reverse and go all the way back up again. Well, that was months in advance. That's why we're still long this. Even though it's turning over, it still needs to stair step higher in the coming weeks and months. So I would say by the end of 2019, probably a little bit sooner, we should be up here. All right, well, Gary, that's another year or so. Well, sometimes it takes a while. And it depends how long this monthly stays engaging down before it turns and hooks out. And then we start to see the monthly navigate back towards overbought. All right, so what does all this mean? That means you can use this software, and as I'm showing you the hook and cross pattern, we've even automated all this. So when I tell everybody, hey, sell the next slingshot, we have a trade management system that when the slingshot forms and engages, it'll enter it for you automatically, or you can do it manually. Either way. But it's there for your viewing pleasure and your help. And it teaches you how to trade along the way. So if you're a novice, Dave, and never traded a day in your life, then this is the software for you. If you're the most experienced trader out there and have a successful trading career, this will only make it even more successful. because the alignment tells you where price is headed. And watch to see when this goes down, perhaps I would say somewhere around the trend line, maybe a little bit lower, probably to about maybe the 1200 category, another couple hundred pips lower before it reverses. But that's what I'm watching for the weekly to finish the cycle. And long before this monthly turns and hooks out, we're going to be in this trade. We entered before when this hook cross pattern started to take out, and we entered it long before we saw full sign of that. So I'm not saying you have to wait until this monthly turns and hooks. You use the weekly because you know the cycle. It's the weekly moving from overbought to oversold that forces the monthly to engage. So notice this little red line here. When I go to the weekly, you can see why the monthly started to turn over to engage down, because the weekly started to reverse and move down. And it did it again. The weekly started to turn and reverse and move down, started to turn and reverse and move down. Well, it's going to finish this cycle in another few weeks and then reverse back up. And when it does, this is a great buying opportunity, whether or not it goes on to break new highs at that point or not. We tell you exactly what the target should be, and be careful that even if it slingshots and goes even lower, you're still going to get a nice big rally for several weeks when the weekly finishes its down cycle, then turns back up. Pound CAD, just more trades. 461 pips. Well, this is another one that should go up hundreds and hundreds and hundreds of more pips. Well, my daily's just starting to bottom and reverse. This is a good time to trade the pound CAD to the upside and scalp in there. No, this may not be the true breakout and go on to make new highs just yet, but the daily is definitely telling me with the hook, and if this continues to show a cross, then what? What did we learn so far? That if a daily hooks and crosses, the 4 hour is going to go from oversold all the way to overbought. Right? And what else do we know? When it engages down and disengages, it's going to go back to the previous high. So we're not quite there yet. So look for the pound CAD to start to grind its way up a little bit more and start to break a new high where it engaged and disengaged. So the bias is the pound CAD will start to stair step up and down with the movement from sideways to higher, while the 4 hour, watch this guys, this is tonight going into tomorrow's trading session, the 4 hour is going to finish the up cycle because the daily is already turning up, and then the daily is already oversold, and my weekly engaged and turned over to hook back down, but notice where it's located. So this is what I mean. The weekly is still down, but it's getting in oversold territory, right? In the area of oversold. Well, Gary, that doesn't mean this has to reverse right now. No, it could physically go a little bit lower, but eventually it's going to turn and reverse. And that's why I expect it's going to turn and reverse and go on and make a new high. Then it's going to keep going lower and lower and lower. But hey, it may keep going down, and that's why when this daily is up right now, we tell our students, we say, look, buy the PAI hook and then sell the daily slingshot, just in case this weekly's not ready to turn just yet. All right? So what can happen? The daily can go up, you can make nice pips, and then you can sell the hook, slingshot back down, make nice pips. And notice, we got all this in the trade management system, and it shows you everything. Take profits, stop loss, how many pips you're up, where everything is, how much the stop loss. Well, Gary, how come you haven't moved your stop loss? You're up 460 pips. Why is your stop loss below and you haven't taken profits yet? Because I know it's going to go further and take more profits in the future. All right? Okay, let's continue. Euro yen. This is a recent trade we got in, and good news, ladies and gentlemen, we're in a pullback. So the bias is we want to buy the dip in this uptrend. And yes, we're up 487 pips. If you were with us a couple of weeks ago, when we talked about getting in this trade and we placed it in our class, we said what? Hey, my daily's oversold, my weekly's oversold. We're due to start bouncing. So what did the daily do? Went back to overbought. Now it's depressurized. So I admit it. We're going down a little bit. Good. Because we need the depressurization before we can what? Slingshot back up. And why do we think we're going to end up slingshotting back up? Check out the weekly. The weekly is still up. Well, it's kind of flat and turning a little bit. Well, that's because we've been pulling down for the last couple of weeks, and it's barely changing its direction. But look at the trend momentums. We still have slope. We still have angle and separation, and the weekly is up, And if that's not enough to tell you why this is going to end up with a higher low and a higher high, check out the monthly. The monthly was turning over, but now it's starting to engage back up. And it's early stage, but that's why I think in the coming months, this thing will go much higher, much, much higher in the coming months. But that's why you're here, to learn, well, why would I want to go long? You don't until the daily is ready to slingshot higher. Remember? All right, when is this going to turn and slingshot higher? Well, that's where the 4-hour comes in, because you're talking about a daily. And notice, the daily was expected to move from overbought toward oversold. If it tried to engage up, it would expect it to fail, and then when it bottoms, it should slingshot lower. Why? So the daily can finish the down cycle, right? And my daily engaging down can continue to do so while the 4-hour finishes the cycle. So this is going to be a great trade going into tonight. Hint, hint, hint. Going into London tonight, I'm looking for the euro yen to start bouncing because my 4-hour is deeply oversold. My 1-hour is oversold. My 30 is oversold, starting to hook. My 15 is oversold, starting to hook. So scalpers, there you go. If you want to scalp, scalp it. But if you want to make more than just a handful of pips and make hundreds of pips, then we're going to allow the 4-hour to start the turn and hook process and expect this daily should start engaging up, because that is the expected behavior when a weekly is moving from oversold towards overbought. Pretty simple. And again, this is automated all through this trade management system. So what do? I set my trade and I leave it alone. Let it run. It's either going to continue to reach my take profits, or it's going to turn around and pip me out. Right now, we've already taken profit 1. And as you can see up here at 181 pips. Well, Gary, it's up 488. Why didn't you take profit 2? Because I think this is going to come down and make a high, watch the cursor, it's going to come down, make a higher low, higher high, and keep stair-stepping while this weekly finishes its cycle up over the next several weeks. But Gary, the daily is starting to turn over. Right. This is why intraday, and we know for a few days, we're expecting this retracement, but not a retracement to make new lows. We're expecting retracement to then, finish the cycle, then be forced to slingshot higher. So you'll notice we give you what you should be doing. You should buy the next D1 slingshot. When's a good time to buy the D1 slingshot? When the 4-hour bottoms and reverses. And we're very close to there. So this is why this is a great trade to get in now for a quick scalp. But as we move through the rest of the evening, Asia into London, I'm expecting this to start to turn and hook. And even if it takes a little bit more into US tomorrow, we're going to look for this 4-hour to turn and hook. Well, ladies and gentlemen, what is so important about these little hooks? Like I told you, it means so much. It means the lower time frame will cycle. So notice, I can do this all day long. I can do it on any currency, any stock, commodity, futures, ETFs, any symbol out there. And when my 4-hour starts to turn and hook, right? And then we get a hook and a cross pattern. As we hook, then cross, what does that tell us? Well, that tells me when I get a 4-hour hook and a cross that the 1-hour is going to go from overbought all the way to oversold, right? Here it is in overbought, and it's going to go all the way to oversold. How do I know? I know that hours and hours and hours in advance, because this software is set just like that. So that when the time frames do hook, it dictates what the lower time frames will finish following through. And notice what it did. It went from overbought to oversold, then slingshotted lower and 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 lower, and just kept going, right? Well, why is it doing that? Because the 4-hour is still down. But Gary, it turned up here, right? It turned up, and that's why we say you can buy the hook, but sell the slingshot up and until the daily's ready to turn, right? And when's the daily ready to turn? When the 4-hour finishes the cycle. All right, so there's several trades for you that are going to, this one right here is definitely going to reverse and move higher. You just need to let it finish the down cycle and then buy the daily slingshot. And we tell everyone to buy the daily slingshot based on a 4-hour hook, because the 4-hour hooking and crossing back up as it moves from oversold to overbought and the trend momentums move up there, then this daily is going to do what? It's going to reverse and engage up and price is going to go from a lower high and grind its way up to a higher high, right? From a higher low to a higher high as the daily reverses and engages up. And again, why again are we expecting the euro yen to bounce sooner than later? Because all time frames are oversold. That's why you could scalp this right now to the upside. Don't expect to get in, make 100 pips, and get out in 10 minutes. Never going to happen in Asia unless some major event happens, but it's not going to happen during Asia. It's going to take time. It may be up and down where I'm up in a winning trade, I'm a losing trade, winning trade, losing trade, winning trade, losing trade. Give it time and it will reverse, because these time frames will reverse and start moving higher, and price is going to move higher. Watch how this plays out over the next several hours, and watch how this plays out as we go into the next day. All you need is the software to tell you to hook, and if we end up getting the flower to hook and cross. Notice when we hooked here, we didn't cross, we were flat. Well, what if we get the hook and the cross? Then we're going back up, hint, 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 we're going higher, and we're likely to make a new high as we go up another couple of hundred pips to take out the previous high. Okay? Potential trades that are setting up. Well, before I do, I wanted to show you a couple of more things. The other one that is very likely to start reversing very soon is its counterpart to the euro yen, and that is the dollar yen. The dollar yen is up only 100 pips at the moment. We're pulling back, but long term, I expect the dollar yen monthly is up. Trend momentum is starting to cross. The green is above the red, so we have a monthly hook and a cross. This little indicator, as it goes from below the goal line to above the goal line, that's when the green crosses above the red. When we're above the line and go below, that's when the green line crosses below the red. And then when it's from below to go above, when the green line crosses above the red, right? Boom. So that has already crossed above, so we know this is a hook and a cross pattern. Well, why is that important? Because months in advance, it's telling you the monthly hook and a cross pattern with a slope. We don't have angle and separation on this crossover yet, like it used to, but it's still up. And we expect this will, in the next several months, move into overbought territory. So that means this weekly should exhibit specific behavior. If it tries to slingshot lower, it should fail. And what happens when a slingshot fails and disengages? It goes back to the previous high and makes a new high. Well, it's starting to think about engaging again. Well, I believe it's going to turn and then slingshot higher in the coming months, or actually coming weeks. And when should this weekly finish the cycle before it slingshots back up? Just like we told you before, the daily cycle. So if you want to make some pips to the downside, the daily is telling us we have some more downside to give on the dollar yen before we then bounce and start making higher highs. Well, why are we going to start bouncing? Same as the euro yen, right? My 4 hours oversold. My 1 hour's oversold. My 30's oversold. My 15's oversold. So this is where you can start to scalp this. And yes, don't look for it to go, I'm up 5 pips, 10 pips, 20 pips, 50 pips, 100 pips, 200 pips, 300 pips. Man, this is good. No, expect it's going to go up, down, up, down. Well, I'm up 2 pips, I'm down 3 pips. I'm up 6 pips, I'm up 4 pips. I'm up 12 pips, and expect this to bounce up and down, sideways to higher as we move from now towards London. Start to move higher. And not just straight up. Remember, it might even engage, disengage, engage, disengage. But how do I know the 15 is going to hook and cross? It's working on it. And what does that mean with the 1 hour? If my 1 hour gives me a hook and a cross, then the 15, and well, in the case of the 1 hour hook and a cross, the 30 will go to overbought. And what happens if I get it later, a 4 hour to hook and cross? I get this to hook and then cross. Then that means for hours and hours, we're going to get hours of upside pressure, so the 1 hour can move from oversold all the way to overbought. And all I need to confirm that is this 4 hour to turn and hook, and the trend momentum to cross. Hook, cross. 1 hour would do what? The 1 hour is going to reverse and work its way towards overbought. And the trend momentum is going to turn up and start working its way towards overbought. Admittedly, it might do one of these where it starts to engage, disengage, engage, disengage, but still grind its way higher over the next several hours. So this is why this is another good trade to start scalping and be patient to stay in it for several hours, because it's going to take its good old time to do it. All right. Now, everyone's interested in the S&P. The S&P is going to the moon, literally. Well, what does that mean right now? We're in the midst of a pullback. And that is, you want to look for your opportunity to buy into the trend, because the S&P is going to continue to stair-step its way to this destination of 3,000. Could go higher than 3,000, but for now, we're going to 3,000. Absolutely going to 3,000. Well, how much of this pullback are we going to see? We're going to see a bit of a pullback, and I'll show you why. Not a lot, but just a bit. And this is where the software comes in. Well, why are we getting a pullback? My 1 hour cycling from overbought back toward oversold. My 4 hours doing the same, starting to turn over and head lower, finishing a cycle. Right? A little bit more downside for this, clearly. And we have a daily that is just starting to turn over. So this is why I do expect the S&P to pull back a little bit. And no, this is not the market crumbling and crashing. I like to call Elizabeth, I'm coming to join you, honey. Fred G. Sanford, put your hand on your heart, stumble back and forth, breathe in and out and go, Elizabeth, I'm coming to join you, honey. Well, that's what the S&P is going to do probably in 2019, 2020. We'll worry about the date and time later. But for now, we're going to keep stair-stepping higher. But we need this pullback so my daily can do what? Slingshot higher and higher and higher. Okay? Well, that's good. Why do you think that? Well, again, the weekly's still up. Even though it engaged and disengaged, what did it do when it engages and disengages? How many times do we say that? It moved down, and then when it disengaged, it moved back up, back toward the previous high, and made a new high. How about that? Isn't that awesome? So there's a lot of things we learn just by watching the cycles. And I can tell you exactly what the signs and symptoms are going to be days in advance, weeks in advance, months in advance. Depends what you're trying to accomplish. Well, again, when is this daily likely to slingshot higher? We're telling you to keep buying daily and 4 hour slingshots. Definitely keep buying them. But the daily needs to slingshot higher because the weekly is still up. Okay? That's why we believe we're going to slingshot higher in the coming days, but we need to finish this little daily pullback. And that's what we're doing, right? We're starting at the daily pullback. And that means what? If I end up with my hook and cross pattern, we're very close. We're right at it. See it? Hook, cross, starting to move below from above the goal line to below that aqua line right there. And we're starting to see green below the red. Hook down, trim cross. So what does that mean? That means this 4 hour is going to finish this cycle. And long before, while we were in class last week and the 4 hour started to turn up, I said, look for this to engage up and fail and turn back down so that the daily can what? Continue to depressurize. So look for the S&P to pull back. Those of you that have Ichimoku charts, I would look for this to go back to a 4 hour cloud area, for it to come back down close to these previous lows, maybe a little bit lower, and then bounce to go back up. And when the 4 hour does what? When the 4 hour finishes its cycle and then gives me a PAI hook, you buy and go long. And the S&P is going to start climbing higher again. Well, Gary, what about the weekly? The weekly is still up, and even the monthly. The monthly was turning over, but it's slingshotting higher. Now, this is what I wanted to talk to you about. This software, when you combine the trend momentum and the PAI, and all this has been reworked. I'm constantly tinkering with this. So if you were with us 10 years ago and you think, well, this is similar to what I saw 10 years ago. No, it's not. It's totally different. Similar situation, but totally different, and it's all been automated into a trade management system. And it continues to allow you to say, hey, I could tell this trade management system, hey, buy the next monthly slingshot up. And guess what if I'd have kept buying monthly slingshots for months and months and even years and years and years now? So this is what I mean by this software is the epitome of a trend continuation software. It also tells you intraday market, hooks, cross patterns, all that means things. Well, I'm going to blow your mind before we finish. And that is, not only does a hook and cross pattern dictate what the lower time frames are going to do, but guess what? It's tied in with Fibonacci's. How about that? And what does that mean, tied in with Fibonacci? You see this daily? Let me move this out of the way. I'm going to show you something. A daily from the swing point low, the last time, why there? Well, I could use either one of these. It was the last time my daily was oversold before it turned up. So that's my swing point low. This is my swing point high coming into play, right? Because my daily is now starting to turn over. Okay, so what else is it? Watch this closely. You see how we're starting to see the beginning of a hook and the beginning of a cross? Well, in the next, obviously the end of day, as we go into tomorrow, we'll get a new candle. And if we end up seeing this hook and cross where we start to see the green line below the red with a little separation, then expect the S&P will make a retracement toward this area, sweet spot. And someone asked, what is the sweet spot? A sweet spot is considered a 38.2, a 50, and a 61.8. Why that? Sweet spot. Because of all Fibonacci style retracements, the vast majority will go to the 38, 50, 61, then a 23 or a 78, 88, etc. The vast majority will go to the sweet spot before continuing. Well, why do I think this is going to slingshot higher and not reverse and come all the way down? Because the weekly is still up right now. And we expect the daily will be forced to slingshot higher in the coming days, but we're likely to see a little bit more downside pressure first. So watch this. If we get the hook and cross as this develops tomorrow and get another slope down and this starts to separate. What do I mean by this green below the red separating? Like over here. Crosses over and green starts to separate from red. Green starts to separate from red. Anytime on the downtrend, green starts to separate from red. Then we're likely to see this reach the sweet spot before we buy the dip. Well, guess what? The only way we don't reach this sweet spot, and it's at 27.72. Well, that's another 22 points, 26 points lower. Okay. Well, how do I know I'm going to drop 20-something points? Well, the only way we won't reach that target is if this daily turns and slingshots higher. That's it. That's all I got to look out for, is this reversing and engaging back up on me before I reach this target. And high affinity, I am talking high probability when you get a hook and cross pattern, you at least get a Fibo retracement into it, if not a trend reversal where it goes on and breaks to new lows, right? But right now, we don't have a weekly turning over that would suggest that daily pushing down is going to make a new low and force price to make new lows down here. I don't see that until what? Maybe we'll talk about that when this weekly reverses. But for now, it's still up. It's still up. So the line of progression says that this daily will turn over to slingshot higher. The weekly's been up for weeks and weeks and weeks, even months. So what is it doing? It's forcing the daily turnover and slingshot higher. Turn over and slingshot higher. Turn over, slingshot higher. So everybody finish my sentence. Turn over, slingshot higher. And when's the best time to buy it? Based on the anatomy of a slingshot, it's when the 4-hour finishes this down cycle. So Victoria and others look for the S&P to start to grind a little bit lower first before bouncing and going higher up and until the 4-hour finishes the cycle, then turns up, then I'll buy when the 4-hour turns up. All right? Okay. Let's continue. We got so much more. Any Bitcoiners out there? Anybody likes Bitcoin? Well, how would you have liked to gotten in this trade in May? Right now it says 133,344 pips. That's a lot of pips. But with Bitcoin, that represents a $1,300 move. You can see my entry was 61.26, and the entry is good. And I put it in our classes. You'll see I titled the class, Look for Cryptocurrencies, not just Bitcoin, but look for cryptocurrencies over the next several weeks to months to start to bounce and get in it. Why? Same reasons. Weekly was deeply oversold, starting to turn and hook. And now it's followed through in the successive weeks where it's not only hooked, but now it's crossed, and we're starting to open some angle and separation. Hook, cross. We're going higher. Absolutely going higher. But Gary, it's going to come back a little bit against me. Sure it is. We're going to do this little sideways movement, maybe even sideways to a little lower while the daily depressurizes, but I'm expecting it to do what? Turn over and slingshot higher, turn over and slingshot higher. Why? That's the behavior the daily exhibits when the weekly is now up. Notice the behavior the daily exhibited when the weekly was down. The daily went from overbought to oversold. Then when it tried to slingshot up, it would fail. When it does, it's going to go back to the previous low and make a new low. I mean, just repeat itself over and over. Then when it turns and starts to go up, it should slingshot lower and lower and lower and lower and lower, right? Well, why is it stopped that scenario, making what? Highs, lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. What does the trend change? Because now we have lows, highs, higher lows, higher highs, higher lows, higher highs. And my weekly has reversed. That's simple. So when did I enter this trade? I entered it before the weekly actually turned and hooked, and I bought it on the daily reversal way over here. When the daily started to reverse is when I got in, I stayed in, and boom, up $1,300 on Bitcoin. Pretty simple. And that's not the only cryptocurrency you can trade, but that's just one I entered this trade for. But that's the beauty. All right. Any stock traders out there? This is going to be a great trade setting up even for you options traders. This Teva, if you would have been with this, let's go back a few months. Actually, let's go back to this weekly. See a little bit more of price action. When Teva was starting to bottom around this $10 range, I told everyone, buy Teva. It is going and going to stair step its way to $28. $27, $28 range. Why that? That's the former battle zone. And why do I believe this is going to work its way low, high, higher, low, higher, high, higher, low, higher, high, higher, low, and continue up here? Well, look at the weekly. The weekly did the exhibited behavior we would expect when a monthly's bottoming and reversing, moving from oversold to overbought. The weekly should move from oversold to overbought. If it tries to engage down during that period, it's expected to fail. So we ended up with a low, a high, a higher low. And as it then reversed to what? Slingshot up, make a new high. Remember, when it engages and then disengages, we're going to go back to the high and make a new high. Okay, now we're going down. Right. We're in the process of a correction, but the weekly is expected to do what? Turn over to slingshot higher. Watch the cursor. Turn over to slingshot higher in the coming months. So, when do we expect Teva to stop going down? When this daily finishes its down cycle. So you see how it engage, disengage, engage, disengage, engage, disengage? The weekly's turning over, so this will finish the down cycle, right? Finish the down cycle. So once I see the weekly deeply oversold, probably another few weeks, couple of 2-3 weeks, we'll see this deeply oversold. And even before it hooks on the weekly, well, that's the daily I'm showing you, sorry. Daily, I'm going to buy it when the daily hooks. And even before the daily, as it gets oversold, before it actually hooks, Dave, you can actually use the 4-hour to buy the hook, sell the slingshot until the daily finishes and turns. When's that going to be? When this 4-hour finishes its grinding, reverses, and starts to move higher. So I'm not expecting Teva to go down too much further before you get the big reversal, but the daily is likely to turn and hook out so it can finish this little bit of cycle left so that my weekly can what? Depressurize to form a new slingshot higher. So watch where Teva goes. We can go down a little bit more. I'd be surprised knowing that Teva had a rejection wick here and went all the way back up, that if it comes down to this area, this is probably about the time it's going to want to slingshot back up. So yes, we could go a few cents lower. I'm not looking for this to plummet $10, $15, $20 and go back to the $10 range. Absolutely not. Or lower. I'm looking for this to make a higher low and a higher high. But it doesn't matter what you use. Netflix. Why is Netflix picking over? Well, we got a hook and a cross pattern. That's why. Why is it going down? Because that's what's expected to do. Well, is Netflix going to go to zero? Of course not. My weekly's depressurizing. That's why I said months ago to look for Netflix as it started to top out, start to look for it to go up and down, sideways to lower, as we already have a weekly hook and a cross. James, weekly hook and a cross, what does that mean? That means this daily is going to finish this down cycle. So I love when I see these intraday bounces or days where they start to rally up, you're thinking, oh, I need to look for this to break a new high. Not when it has a daily trend momentum and PA down, slope angle separation. No, that's a 4-hour depressurizing and then slingshotting lower in the direction of the 4-hour. And that's what it's done. It moved, it slingshotted lower, and even recently it's starting to turn back over. So yes, this is expected to go a little bit lower, of course. Why? Because we expect we're going to get a few more days of downside pressure, maybe have an intraday up, but nothing significant to new highs, just an intraday bounce, but we should finish the cycle because the weekly has spoken. Well, Gary, what about the monthly? The monthly's deeply overbought. No, it hasn't hooked and crossed yet, but if this were to develop in a hook and a cross, then we would expect the weekly to finish the down cycle and Netflix give us weeks longer of a depressurization. But the bias is, man, this thing's up and we're going to buy the dip in an uptrend. All right, and a couple more. Odd New Zealand, another one that you want to be on the lookout. Why? Weekly is up, starting to get towards overbought, but the monthly is also up, similar. So I'm expecting this to stair step higher too. When is this going to go back and make more than 150 pips? When the daily reverses. So I'm looking for a little more sideways to lower movement till the daily finishes the cycle. Then I'm going to buy the daily cycle like I did the last time and expect to get a lot of pips back to the upside. Simple as that. All right. Any other questions regarding what we've discussed? Now, we hadn't had a deep discussion about the Fibonacci retracement to a sweet spot. But notice when you get a hook and a cross pattern, it makes a move toward the sweet spot from the swing point low to the swing point high. As we started to turn over and slingshot, what happened? We finally got a hook and a cross pattern, so we went to the sweet spot. Then we reversed and went out. Well, what about this sideways movement? The bias is further up, and when you want to know why, all you got to do is look at the higher time frame. We're up, and a weekly, yes, it's still up, but it is moving towards overbought. So we like to say intraday you can trade up, but we want to use the 4-hour PAI hook before we buy it. So what does that tell us? We want this 4-hour to finish its cycle, and when it comes down here and hooks up, you can scalp that to the upside and take aggressive profits. Why? Because I'm not expecting this necessarily going breaking new highs yet until this daily finishes the cycle down, but intraday I can scalp it to the upside once this 4-hour finishes down and then turns and hooks. Once I get that hook, good time to buy and go long and scale into this position. And yes, it will make some pips. May not be the one that breaks new highs yet because the 4-hour could turn and hook and then slingshot lower later so the daily could finish, but you could still buy the PAI hook, then sell the slingshot after if my daily doesn't turn. But it's scalpable, and we do this all day long. All right, another one to keep an eye on is the dollar, Singapore dollar. If you're a currency trader, this one is definitely going to turn over and continue to go higher. We're up hundreds and hundreds of pips from a class, and the monthly is smoking to the upside. Hook, slope and angle, cross, angle and separation. We're definitely going higher. So guess what, ladies and gentlemen? Based on the hook and cross pattern, we told everyone to buy the dollar, Singapore dollar, and stay in it for months, and we would at least get a Fibo sweet spot retracement because we have the hook and the cross, slope, angle, separation. Well, Gary, does that mean we can go higher? Sure, this thing might even break a new high. We need to follow the weekly, and the weekly so far is doing what it's supposed to. Engage, disengage, engage, disengage, but what? Move from oversold to overbought. And what does the scenario tell you? When the monthly is up, the weekly is going to do what? It's going to turn over in slingshot higher. It's already doing that. And it's going to do it again and again and again while that monthly continues to cycle. So buy the dips in the dollar SGD. All right, now let's finish up. So let's let you see what we have in store for you. Here's some more winning trades. This is gold, and it just shows you our automated trade management system. That's a $126 move. We're not talking small moves because we align the higher time frames and we'll let the system trade it, and it automatically manages the trade from start to finish for us. Here's one with gold to the downside. Not only do we have triggers, we also do the hook and cross pattern. When we get a hook and a cross, what happens? My monthly was down, my weekly was down, my daily started to top and roll. So we expected gold was going to get a significant move lower. So we're able to sell gold based on that hook and cross pattern. And what happened? It was a $150 move lower. How cool is that? Very simple. That was a $30,000 trade right there. Very simple. Here's a screenshot of our member that started using our software years ago. He started to use the alignment of the time frames, and he made 8,600 pips and counting. Well, because the monthlies and the weeklies were in the same arrangement, same alignment, he went on to say, because of my slice of heaven finder, meaning that's when the time frames align, it went on and moved, and it went on up to 18,311 pips and counting.
Slice of Heaven is one of our scanners.
And guess what? The Slice of Heaven Finder is one of our scanners that automatically scans all symbols to find the ones that are setting up, and you can customize it to know when the monthly, weekly, and daily are aligning, or when the daily 4-hour, 1 hour, or a 5-minute, 15-minute, 30-minute if you're a scalper. And it scans the markets, finds it for you, and then you go to the chart and you place the trade accordingly based on the hook and cross patterns. Very simple. Or if that's not enough for you, you can tell the trade management system, get in on the next hook and cross pattern, on the next slingshot. Just a few more of these. There it is in the platform showing 18,311 pips over multiple currency trades that he had ongoing due to the alignment. Continue. Here's another one. Pound odd. We're in the pound odd long, and this is where we were up 778 pips. How cool is that? Well, because my monthly and weekly were aligned to go down, we knew this 778 pips would continue, so I let it continue to run. And what happened? That same trade went on to 778, and the same trade went on to 1274. Kept going because it's still in alignment to 2270, and we weren't finished there, and then went on to 3,627 pips by a simple rule. I don't trade without the foreman and the workforce, my 4-hour, 1-hour lower time frames. I align those first, and then I pay attention to where the higher time frames are located. That's all you got to do, and boom, 3,627 pips. We do this all the time. This is not a rare occasion. Here's another one, the pound CAD trade. We're now long on it, but this was when we were short, and that one's 3,073 pips. And this is an ongoing experience, constantly. Here's the pound yen, 3215, 3,215 pips. This service, this software, and my tutelage is how you make tons of pips. We even have what we call a breakout software that you can set a high and a low, and depending on whether you expect it to break out or break low, you can tell it, okay, I don't care what you do. You break high, I go long. You break low, I go short. Or based on the alignment of the time frames, I could tell the trade management system, I don't care if it breaks to the upside. I don't want to buy it. I only want to buy or sell it when it breaks the low. And this is an example of 272 pips on a breakout trade. And yes, it continued to go further, but this is just a piece of the puzzle, and where you made 272 pips on simple breakout. How cool is that? Now, what is our Master Trader program? It includes our Premium Edition 3 software, which you've been seeing all night.
The fraction
fraction of it. I mean, you haven't seen any of the components. We have so many tools in this toolbox, it's unbelievable. And it includes our market price anticipator live trade class where we tell you exactly. We go in such detail with the software. I call it painting the Picasso. And I've been trading the software for so long, I know exactly what it's going to do, when it's going to do it, why it's going to do it. But that's not enough, Tony, when I tell you watch the hook and cross, because then I'll tell you, well, if it doesn't end up going all the way up and it decides to turn over and do the opposite, then it's going to look for it to do that. So I give you a plan of action and I paint the way the software should look like and what it's going to do. And then I give you an alternate plan of action in case it reverses, what to look for and what signs and symptoms to follow. Along with that, support and resistance levels, the works. All right. And we meet 3 days a week. You're in our live class on average 8 to 10 hours. Let's say 7 to 10 hours per week.
As I can see, you enjoy.
And as you can see, I enjoy instructing students on how to be successful. And now, what does the software include? You haven't seen any of this. Market Scanner, Slice of Heaven Finder is the one that sets up where all the time frames, the monthly, weekly, PII hooks and crosses are setting up in the monthly time frame, weekly, daily. It's all customizable 100%. So again, if you're a scalper, you can do the 5, 15, and 30-minute time frame, or the 1 hour, 4 hour daily, or daily, weekly, monthly. It's all customizable 100%. And MPA slingshot trade triggers. I showed you the slingshots and I showed you a couple of pictures of the triggers. Those are awesome. The trade management system, you briefly have seen all those live trades running were placed by the trade management system and running by the trade management, managed by it. We have a Platinum Asia scalping system for those of you who like to trade Forex in the Asia time slot. And it's a very special scalping software. We have a Triple P scalping software that not only works as scalper in any market, not just Forex, but all markets. And you can use it on all time frames. So you can be a scalper, a day trader, position trader, all with a scalping system. How cool is that? And the breakout trade system I just showed you a moment ago with the 272 pips, where the trade management system's so smart, it knows its time frames and where they're located. And then the bracket trade system, where if you have a system where you know, well, I've been stuck in this currency, stock, commodity, future ETFs, been stuck between this up and lower level, and it's due to break, you can set it to go short when it breaks or bounce and go long when it hits it. You can do anything you want with that bracket trade system. Unbelievable. Now, top 10 reasons why you should trade with MPAPE software. It automatically calculates support and resistance levels. It'll automatically identify the trend of each time frame. It'll automatically monitor and track the time frame cycles. So this system is so smart, it looks left, it looks right. It's aware of all time frames, where they're located. Are they turning and hooking? Are they topping and rolling? It knows everything, constantly monitoring it. It provides consistent entries, exits, and take profit levels based on those triggers, slingshots, and profit triggers. The trade management system is a twofold. You can set it in advance to tell it to buy the next slingshot, or you can set it, Scott, you can say, hey, I don't want to buy anything. Gary told me to buy this when the daily turns and hooks. You can tell your trade management system not to do anything until it triggers higher on the daily. And it'll stay loaded, locked, and set, ready to go, and it might take 2 days, 4 days, 5 days, 10 days, whatever, till it finally gives us the entry you customize and it'll enter it for you. That's the beauty of it. I can set a trade. What if I have a job, Eric, and I got to go to work? And man, I think I'm getting close to this thing turning and hooking. I don't want to miss it while I'm at work. Well, you can set the trade management system to take it for you when that criteria is met.
Based on your type of trading.
And then it's an automated system where not only can I customize my entry, like if I'm looking at the charts and go, man, this is a good trade right this second to get in. Then you can just click and drag the trade, buy it and go long, or sell it and go short right there on the spot, and it'll manage your trade from entry to exit. It fits any trading style because we work with all time frames. The dual scanner scan the market for the next big trade. You won't miss it because we're always in tune with the next big trade. It works on 800 symbols, including stocks, Forex, futures, ETF, commodities, etc. And the most important thing, it consistently delivers low risk, high reward, high probability trades. What more could you ask for? All right. Now, what is the offer today?
In honor of our Sunday summer
In honor of our Sunday summer soiree trading event, we would like to offer our premium edition trader program monthly subscription. We normally don't offer monthly subscriptions. If you go to our website, you'll see we have annual, semi-annual, etc., but there's no monthlies located on there. Occasionally we run the monthly specials, and this is one of them. In the past, we offered a monthly special for $3.99 for the software and the class. Tonight, we're going to offer it to you for $2.97. Now, David, put that into perspective. Well, I know other services want to charge you more than that for a trade service or a class, and I know services that charge you way more than that for software. No way does anyone ever give you this quality software plus 8 to 10 hours of live instruction to the degree in which I instruct, to the nth degree, painting that Picasso of what the software is going to do. So when you see the software do what I say it's going to do, you enter it. If it doesn't do what I say it's going to do, then leave it alone. That's simple. But you will teach you how to fish and earn while you learn, because we're placing trades all the time when the setups are there. I tell them every day what to look for. If you want an intraday trade, then look to do this when it turns and hooks. It'll probably be another couple of hours, but I go in great detail. Now, how do I sign up for this? Very simple. Trish, would you go ahead and post that link? You click on this link that Trish is posting. If for some reason you're unable to click on it, then copy this link and place it in your browser. And when you do, it's going to open up to a window that looks like this. And you can see it's our website, and you just fill in your name information, and there it is. And we have our Gary's Market Forecast on Tuesday, which we review all the markets. We're reviewing hundreds of markets, and not every day do we review hundreds. Obviously, I would be saying one word and then moving to the next chart. I go in great detail, but we do cover numerous markets every class. And I've been known to go at least 2 hours, and probably more like 2.5 to 3 on average. All right. So why us? Well, we first want to thank you for attending the webinar, and we look forward to you joining us. And the reason is the Market Price Anticipator software earns its name and empowers you to read and anticipate price in any financial market on time, in time, all the time. Our service has been around for, as we mentioned, for over 8 years. We have members from over 123 countries and counting. So if you happen to be from a country and the flag from that country is not represented on this world map, then we welcome you to join us. And as soon as you log in and sign in, your little map will appear on our world map. How cool is that? And we're proud of our service. Now, what separates us apart from everyone else? We're not a large company looking to bring in thousands and thousands and thousands of people. Cattle call, everybody come in. We want select individuals that are serious about trading and that care about their trading results, because we care. And we have the best technical and customer support out there. We know our software, we know how to install the software, and we know how to fix any problem the software can throw your way. Our technical support is world class. All right, as you heard in the background, what if I'm working during your class time? Can I, is it recorded? Yes, everything's recorded, and it's available for your viewing pleasure. And the beauty of this is, ladies and gentlemen, the reason we're different is, notice, when I review a market, I review it from a top down, and I tell those of you that want to be in the long trend to buy the dip in the uptrend. For those of you that want a short term and get in, get out, then you could use it for a quick intraday scalp. And I tell you exactly how to use the software based on the signs and symptoms. And all of this is automated. All right. I see several people signing up already, so I want to thank those new members for signing up. You can join us again on this Tuesday, so you'll be getting a username and password to log into to the members area. And once in the members area, you can install the platform, download the software into that platform, and you'll be up and running in minutes. Very simple. If you have any technical issues, let us know and we'll have a technical support agent with you and get you all set up. And again, I don't care what you're trading. I just love chart time. What did we start off at the beginning of class? We said look for this to go down a little bit lower for the S&P. The 4-hour will finish this down cycle. So those of you, we're going to start making some points to the downside on the S&P. And yes, this isn't breakdown to new lows. It's going to be a higher low, higher high. And once this 4-hour finishes this down move as we go into US session tomorrow, and this 4-hour starts to turn and hook, that's a great intraday scalp to make you several points and get out. Well, I've known many S&P E-mini traders, and they literally die and go to heaven if they make a point or two. Well, we consistently make 10, 20, 30, 40, 50, 100 points by aligning the time frames. Simply aligning the time frames. That's it. And then you have the instructor that tells you exactly what to look for. So right here, what's this 4-hour going to do? In the next 34 minutes and 4 seconds, we're going to get a new 4-hour candle. That's part of a candle countdown. And this is going to extend lower, and this is going to extend lower. So we're probably looking at 4 to maybe 8 hours as we start to go into US tomorrow, by the time this thing finishes the cycle and starts to turn up. Well, whenever it does, look to buy this and look for the S&P to bounce. Maybe not be the one that breaks a new high right now. Why? Because my 4-hour could bounce, but sometimes when the 4-hour moves and bounces, the daily's not ready. So James and others, if I see the 4-hour hook and cross and I'm scalping up, and I don't see the daily start to react, what does that mean? Start to flatten, change angle, starting to turn and hook. If it doesn't react to that 4-hour and stays down, then the 4 hours it turns up, yes, it'll be a bounce, but it's then going to form a slingshot to go lower. But I can what? Buy the hook, then sell the slingshot if my daily doesn't respond. Well, what if I buy the 4-hour hook and my daily does respond? Then you stay in it and you're likely to see a new high. Not all-time new high, because we're talking the S&P swing point high right here. So remember what I said. If we get a hook and a cross pattern down by the end of the day, then expect we're going to stair step lower. Even with a 4-hour bounce and a slingshot down, we should reach the sweet spot before reversing and going higher. Well, what if we start to see the daily engaging prior to that? Remember, that's the only way we won't reach that Fibbo right there, is for the daily to engage up. So that's why I don't know if my 4-hour hooks and crosses, if it's going to go all the way to overbought and force the daily to engage, or if the 4-hour is going to turn and hook and then go all the way to overbought. Well, guess what, guys? Ladies and gentlemen, Christina, it doesn't matter, because the 4-hour turning and hooking up, even if it turns and hooks up the slingshot lower, you're still going to make your points on the S&P to get in that trade. Well, what if it does and it keeps going? I'm up numerous points, and I not only see the 4-hour start hook and cross, but it keeps navigating. I see the daily start turning. Then stay in it and look for this to break a new high. That's simple. All right. And I didn't show this earlier, but I think I have one open. Let's see. Give you an idea. I think I might. No, that's that. Let me see if I have a scanner open. This is on my show computer, so this is not the Slice of Heaven scanner. This is the Premium Edition 3 scanner. This is part of the software. $297 a month, you get every tool in the toolbox. It's not a partially operating software because it's only $297 special. It's everything. So what does this do for it? This is unique because I can dictate whatever symbols I'm interested in following. Same scanner for viewing pleasure. And I can instantly tell when the time frames are cycling down. Look at the dollar Swiss. 1 minute, 5 minute, 15's trying to turn up at the moment, but it's struggling. And we see what? 30 down, 1 hour down, 4 hour straight down. So that's telling me these higher time frames are going to want to push lower for a little while. And this 15 right here that's starting to bounce, it's going to slingshot lower. It's already starting to form one. How cool is that? And how do I know when it's forming versus engaging? It's bolded when it's engaging. It's light pink when it's forming. And in green for up, it's light green when it's forming, and it's dark green when it's engaging. But this gives me everything: support, resistance, where current price is, whether or not I have trades on or not, and then the ADR, what's the average daily range for this currency, stock, commodity, whatever you're tracking, and then what percentage of the ADR has it moved so far during this trading period. But all that's included. And if you still don't have enough of reviewing the markets, I'll give you one more. Black Gold Texas Tea, the Beverly Hillbillies. We love to trade crude, and we nail the movement of crude. So what are we in right now? We're in the midst of a pullback. How do I know we're in a pullback? Because I see price going down. No. The reason I knew Black Gold Texas Tea was going to make a pullback is because the daily was overbought and it was starting to turn and flip over. And notice we expected the daily would move from overbought to oversold, so I knew oil prices would stair step sideways to lower for days. Why? My weekly dictated. What did my weekly dictate? It dictated right here, David. We have a hook, we have a cross, we have slope, we have angle and separation. We got everything we need. Plus, we got massive divergence, negative divergence, combined with a weekly hook and a cross. So what does that mean? The daily. So we knew that days, not just minutes ago, hours ago, we knew that days ago, Tony, that we were going to move from overbought to oversold. If it tried to slingshot higher, it would fail and turn and hook out. So as it tried to slingshot higher, failed, turn and hook out, where do you think this is going to go? It's going to go back to this previous low and start making a new low. So the daily can finish the down cycle. Well, how much lower is the daily going to go? Well, the daily can not only go further down, but if this weekly keeps going week after week after week lower, and the trend momentum's week after week after week after week lower, then the daily is not only, watch this, not only going to finish the down cycle, it's going to then start to slingshot lower and lower and lower in the weeks to come. So watch for Black Gold to continue with a downward movement. And I'm not talking an intra-minute bounce, because if you had the software, you know you'd be ready for those little bounces. When these time frames all start lining up oversold, it will bounce a little bit. But they're not there yet. 15's moving down, 30's moving down, 1 hour's moving down, 4 hours moving down, daily's moving down. So why would we expect crude to go lower? Because my daily, weekly, 4 hour, all are still moving down. That doesn't mean in a few hours that won't change and it bounces a little bit, but I salivate. I don't know about you guys, I start salivating when I know I can't wait to sell the rally, and starts rallying. Woohoo! Well, right now, the weekly has spoken, and this is a new week. This is why I chose to do a webinar tonight. We got our new weekly candle tonight. See it right there, just starting out. And my weekly extended lower, it crossed lower and has separation. So that's telling me this week look for oil prices to move lower. That's simple. Look for prices to move lower. Now again, oil prices will not just drop straight down. They will do the sideways to lower movement and stair step lower, because the time frames are always cycling. Notice the software, you just follow the peaks and troughs, and how do I know if it's going to slingshot higher or lower? Based on the higher time frame. Isn't that awesome? So yes, look for oil prices to keep stair-stepping lower, but Gary, does that mean we've topped and revert? Maybe not. Why? Because the weekly is going to be finishing once the daily finishes the cycle, and my weekly continues to push. How do I know it's not going to slingshot back up like it did here? Right? Why did this one give me a hook and a cross, slope, angle, separation, but then decide to engage back up? Everybody see that right there? It engaged back up. Why? Well, we knew that this was expected to what? By the hook and the cross, slope, angle, separation, we knew the daily would do what? Move from overbought toward oversold. Watching both of these, it moves from overbought toward overbought toward oversold. Because we had a what? Weekly PAI hook and a trend momentum cross. So my daily behaved Started to move from overbought to oversold, and then started slingshotting, but moved from what? Overbought toward oversold. And over here, moved from overbought to oversold, overbought to oversold. But what happened? Notice, we started to slingshot, but then we went all the way up. Trend momentum went all the way up, and it didn't slingshot lower, 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 lower. It did once, made a new low, right? Slight new lower low. But the second time it did not. It reversed and went all the way to overbought. So that's why the weekly that was going down decided to reverse, because the daily started to hook. Well, this is why we use what we call buy a daily PAI hook, then sell the slingshot if the weekly doesn't show signs of turning. So again, what happens here? I'm expecting this to go lower. What happens when the 4-hour turns and hooks up? Or in this case, the daily now. That's why this is here. Crude, daily time frame, current price, how much time's left on the new candle. So when this finishes and turns and hooks up, I'm going to buy black gold and expect we're at least probably going to get a Fibo retracement, if not break out to new highs, right? Well, what would that take? It's going to take this weekly reversing and then going right here, the daily right there, finish down, and then move all the way back to overbought. Basically like this. It needs to turn and go all the way back to overbought. If it does that, then this weekly will absolutely turn and engage back up. Okay? Well, what if it doesn't? What if the daily starts to turn up and doesn't move all the way and the weekly stays down? Then you sell the daily slingshot back down. Right? So my daily would do what? It would start to depressurize. I could intraday scalp it where I buy the hook, but then sell the slingshot back down. And I explain that just like I am now, but in greater detail and more emphasis. So watch for this tomorrow as the 4-hour does what? The 4-hour grinds and grunts, finishes the cycle, then turns and hooks. Intraday, you could scalp that to the upside. Take aggressive profits. Don't expect it's going to go up $15, $20, $30. No, we're looking for it to go into the sweet spot. Okay? Simply by following the cycles. But already it's telling me the daily is expected to turn over and then likely even slingshot lower because of a weekly hook and a cross pattern. Weekly hook, weekly cross. Hook, cross. Hook, cross equals Fibo retracement, and then a weekly hook and a cross equals not only a Fibo retracement to the sweet spot down, but it equals what? My daily going from overbought to oversold. Overbought to oversold. So the next time we see the weekly start to give us a hook, we know automatically days in advance the daily is going to take days to move down. Days to move down. Down we go, and we give you targets to boot. So, is that mean for any reason that this is the end and we're breaking down, or are we going to reverse and go higher? It's too early to call that right now, and it really doesn't matter if we're moving down or we're moving up. I'll leave you with this before we call it an evening. We have numerous trades out there, including the New Zealand dollar. This is another trade you need to get in. Why? Daily just engaged, disengaged, and now it's on its way where? Back to the previous high. It's going higher. Plus we have what? Slope, angle separation starting to pick up, and the daily is up, and its behavior should start to what? Get this weekly that's oversold to start bouncing. Oversold to start bouncing. So yes, you up 40 pips, and this will go to hundreds. Looking for at least Fibo sweet spot. Okay? At least the Fibo sweet spot. Well, if it goes to my 61.8 at 71, you're talking 300 more pips. At least. To get to 61.8 up here. Well, how do I know? As long as my daily trend momentum PI keep going, this weekly is going to turn. And it can do it. Well, it's already a new week. Does that mean this thing could turn before next week? Yeah, it could. It could start to where it looks like it's turning down, could flatten out, and even turn up by next week. That's why I buy them when they're oversold, and I use a lower time frame hook to get me in. And that forces other time frames to follow. So watch for New Zealand dollar to go higher in the coming days, and expect as we go into next week, this weekly will start to turn and hook. If not by next Monday or next Sunday when the markets reopen, John, I'm expecting this weekly to be hooked and maybe even crossed. So what would that do for us with the hook and a cross on a weekly? That means this daily is going to give me days and days and days and days and days of moving higher and higher. So the New Zealand dollar is going to do what? Go higher. So this number will increase in the coming hours and days. Okay? And this is definitely going to go higher, no questions, as it continues to climb. All right? So whether you do trading oil, gold, stocks, futures, commodities, speaking of gold, we do that too. No problem. Gold starting to bounce. Hint, hint, hint. Why is it bouncing? Because I said in the email that we're likely to see this gold reverse between what? This level and this double bottom down here. That we're likely to see it go towards 1200, 1205, and then reverse. Well, we didn't quite get there, but very close. And I said what? Buy the hook. So what does that do for us for gold? It means price is going to bounce even if this isn't the breakout, and it does what? Hooks and then slingshots lower. I can buy it, then sell it based on that cycle. And what do we have here? We have a daily hook and a cross pattern. We're going higher. Hint, hint, hint. We have a hook and a cross pattern. We're going higher on gold. No, this may not be the breakout to new highs, but it's certainly going to go higher up the food chain. And based on the weekly that is deeply oversold, this is why you want to be a part of gold going higher. Because look, even if the daily goes up and then slingshots lower, we're eventually going to get a weekly hook and a cross because it's deeply oversold. And when it does, I'm going to get days of upside pressure. And again, I'm not saying this is breaking out to new highs now, but it's at least telling me gold's going to start bouncing. And if you go and log in, for those of you that already signed up, you'll see a week back I said look for gold to start bouncing. Sure enough, we're starting to bounce. And I suspect we're going to get a little bit more of that bounce based on a weekly being oversold, starting and feeling a little pressure to the upside, and a daily that has a steep slope, hook and a cross pattern. Hook, cross equals Fibbo retracement. And again, if my weekly does finish this process by hooking and crossing, probably won't be until late this week or early next week by the time you officially see it, then expect we're going up to the sweet spot. A hook equals Fibbo retracement. A hook and a cross, hook and a cross, means you're going to get Fibbo sweet spot to a very high probability. And the best news is, right, the only way it can't and won't make it to your destination is for that to slingshot lower. And I warn you about that. The only way would be to slingshot lower, but I go through the process to tell you the only way we're worried about the weekly engaging lower is when the daily is overbought moving down, or the daily is headed down. Well, guess what? Sal, that weekly, Robert Gorey, that weekly is not going to engage down right now. Why? Because the daily is up. Only way possible for the weekly to turn over, this daily, see my cursor? This daily has to turn over and head down. That's it. My daily has to turn over and head down if it has a prayer of forcing this weekly right here that's depressurizing to turn over and slingshot down. So what does that tell you? If my daily keeps going up, then I'm going to expect this to keep going higher. And if my daily doesn't turn over, then I'm going to expect the weekly to start to hook and cross, which then reinforces the same direction even more so. And my 4 hour should do what? Because we got a hook and a cross, my 4 hour is going to move toward overbought. Notice that if it engages while it's waiting, it should fail. And why should it fail? Because a 4 hour trying to engage down against a daily up, this is the behavior, and after it engages and then disengages, right there, you see it disengage? Right there. When it does, what does it do? Well, it engaged down from up here when it started engaging, And then when it finished and turned and hooked back out, we had 4-hour time frame here. 4 hour, 8, 12, 16, 20. We had about a day of moving higher. What did it do? How many times I show you that? Where we engage, right there, engage, disengage. It goes back to what, Robert Gorey? The previous high. It makes a new high. So what else is the 4-hour going to do? If my daily continues with the hook and cross pattern showing steep slope, angle, and separation day after day after day after day, then this 4-hour is going to finish the cycle. When it does, it's going to turn over, and then it's going to start to slingshot higher and higher and higher. So let me turn the auto scroll off and go back in time to where we were in an uptrend, which has been a while, but you can get the point what a 4-hour behavior should look like. The 4-hour, if it moves from oversold to overbought and starts moving higher, then it should move what? From oversold to overbought, turn over and slingshot higher and higher and higher and higher. It does this over and over and over every time the daily is up. I can look at this picture and see lows, highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and automatically I know my daily is either engaging up or it's simply bottoming and going up. But the daily is considered up. Otherwise, the 4-hour wouldn't have the behavior. Now notice on the back side of this, the behavior now is the daily is turning over to go down, or it's slingshotting down, but it's considered down. So my 4-hour does what? Goes from overbought to oversold, tries to slingshot up, fails, goes down and make previous low, makes a new low. Then it starts slingshotting lower and lower and lower and lower and lower. Okay? So watch when I slice this in half. And this is how the slice of heaven was born. That technique, when I started to slice up my charts this way, prompted me to program it just like that in the background. So what does that tell me? Watch the left of this chart over here where the red cursor is going to be showing the daily up. And when you get to the daily, and I said one or two things, to the left we'd be showing the daily up. Okay? And then it turned over and slingshotted higher a few times. And then since then, to the right of this equation, we would see the daily start to reverse and go down, and then cycle and start slingshotting lower and lower and lower and lower and lower. See it? Like clockwork.
Somebody has a question.
NASDAQ. James, you want to look at the NASDAQ? Is that what you're saying? All right. NASDAQ. I think I have one of those. NASDAQ. Okay, everybody good? Well, just like I said, S&P was going to go lower, NASDAQ's going lower. Why? Because I see red candles. How brilliant deduction was that, Rob? Isn't that cool? Well, yeah, it's going down, right, Don? I see red candles. Of course it's going down. No, I don't. My mind is trained not to look at this. It's looking at this. My PAI hook and cross slope angle separation. And we can bet, just looking at what it's been doing, stair-stepping from overbought to oversold, trying to engage higher, failing, bottoming, and starting to slingshot lower. So what does that tell us about the 4-hour? Right? What does that tell us, this behavior about the 4-hour? It's down. So, yeah, it's pretty simple to understand the process, right? This is how the software, once you learn it, you'll never need to learn another software again. It will never, ever, ever, under any market condition, become obsolete. Ever. Because it deals with time frames, and the time frames will always cycle. So, what's the long-term projection? We got a 4-hour that's got a steep slope angle and separation. Recently tried to engage up and failed. And notice what we said? Right, James? When this turns and hooks, we expect the slingshot up to turn and hook out, should go back to the previous low and make a new low. And why would we expect the 4-hour to behave like that? Because my daily's down. And I don't have a whole lot of, yeah, there it is, okay. I just opened this NASDAQ chart recently. So there's the weekly. There's my daily starting to turn and hook. The bias is what? We want to buy the daily slingshot back up. Even if I just buy it intraday, I want to buy it back up. Why? Because my daily's depressurizing, starting to turn over. My foreman in workforce, 4 hours the foreman, It's the gatekeeper, the bellwether between the lower time frames and the higher time frames. You'll hear me reference that all the time. But now you know, in case you're like, what the hell is he talking about? Foreman. That's the 4-hour time frame. The workforce is considered the 1 hour, 30, and 15. Not that the 1 and 5 aren't important, but when they're in line with these guys, yeah, it's only important for scalping, nothing else. There you have it. So long-term projection, higher low, higher high. Why? Well, my weekly is, let me get some more data in here. 1 second. All right. So my weekly is overbought, and it's still flat to up. What I mean by flat, the PAI is more or less flat. It's not real steep slope up anymore. It's starting to flatten out, and my trend momentums are still up, but not at the steepest of slope either. But it is still up. So the bias is even if the weekly does manage to turn over again, it's going to slingshot higher. All right? So monthly. Monthly is going to be deeply overbought, just like the S&P, Dow, you name it. And what have they been doing? Same thing. A monthly's been slingshotting higher and higher and higher and higher and higher, and it too did the same thing. But notice, Eric, Don, I can do this all day, all night, all week. Whenever you get a hook and a cross, everybody see the hook, see the cross? That happened a few weeks back, right? Well, several weeks back. This is on a monthly. So this process of that pullback started about 1, 2, 3, 4, 5, 6 plus weeks ago. And what happens when you get a hook and a cross on a monthly? We got the hook, we got a little bit of a cross, and no, it didn't last long, and then it slingshotted back up. What does that hook and cross pattern tell us that the weekly is going to do? That the weekly is going to start to move from overbought toward oversold. Right? Well, it didn't make it all the way. No, it was interrupted by what? By engaging back up, engaging back up, engaging back up. It wasn't allowed to finish the down cycle. So what happens if we get that monthly to hook and cross again? Right? What if we end up seeing this turn and hook, and later we see this cross? And I'm not talking Don and James, I'm not Nathan, I'm not talking in the next 5 minutes or next hour or next day. This is a monthly. It takes months for this thing to turn and move. So yes, you could see, you could go 1 month and say, well, this is up. And then the next month it might be slightly flat. And it can change, but it's very subtle because it is the big time frame, monthly. So yes, the bias is clearly higher lows, higher highs to come, but I'm watching out for the downside. If we get the weekly to hook and cross, expect the daily to cycle down. We're working right as we speak on a daily hook and a cross. So if this ends up with a daily hook and a cross, then what? We know this 4 hours is going to finish the cycle. How simple. And it doesn't matter what currency, stock, futures, commodity, bonds, anything. That's what it's going to do. So expect this is going to do what now? It's not just going to go straight down. It's going to bounce. And you don't want to put your stop loss 2 ticks up. That's too tight. You need it above a previous swing point, like where it engaged and then disengaged. This would be an excellent swing point. Why? Because it engaged up, found a bunch of sellers, and then reversed. So the likelihood it's going to bounce and stop me out before it finishes this down cycle and reverse up to here before it goes lower is very low probability. Because the daily has spoken, and this is going to finish down, and that's going to finish down. All right? And we're getting a little bit of support. So, yeah, intraday we could get a little bit of a bounce. Right? But what should it do? It should depressurize the slingshot lower. Depressurize the slingshot lower. Why? Because my 1 hour is moving down. Well, what about the 1 hour? This is why intraday, that's what it doesn't matter. Well, Gary, I could be in a downtrend, and intraday I could buy a bounce and make a fortune even though I'm trading against the trend. Well, that's why I don't trade without the alignment, but even though it's against the trend, the alignment is there, I can scalp it up. And this right here, when I get this 1 hour to turn and hook, and if I get a hook and a cross as we go into tomorrow's session, and I see that hook and cross, then that means I'm going to get this 30-minute to stop slingshotting lower and start reversing and going into overbought. Right? That's what it's going to do. It's going to reverse and go into overbought territory. Reverse and go into overbought territory. and this is going to go up. So watch for this to start to bounce now. Why? Because the little bitty lower time frames are starting to hook. It's going to bounce a little bit. Yeah, I can make a few points, 2-3 points, and then get out because it's likely to turn up to slingshot back down to finish that 4-hour cycle down. So that's what I mean by watch what I say and not what you think you heard me say. Interpret what you see in what I say. So up until the 4 hours reversing, then I'm interested in a much longer term position. In the short term, while the 4 hours down, you can buy a little bounce here because the workforce is oversold, 30. 1 hour is deeply oversold, 30's oversold, 15's oversold, starting to bounce, 5's oversold, starting to bounce up. And what's this 5 minute going to do? It's going to do like this. It's going to engage, disengage, engage, disengage, grunt and grind, and price is going to bounce like a pogo stick, up, down, up, down, up, down, sideways to higher, while we engage, disengage, engage, disengage, and start moving toward overbought. What does the engage, disengage look like? Like this. Go up, slingshot, disengage, slingshot, disengage, slingshot, disengage, slingshot, disengage. That kind of scenario so your trend momentum can cycle up. Okay? So expect some of this up, down, sideways to higher to play out now over the next probably few hours. And this will go up and engage, disengage, engage, disengage, and cycle towards overbought. How do I know it's going to make it all the way? If my 15 ends up giving me a hook and a cross, it's a done deal. And then what happens if my 30 then gives me a hook and a cross? Then the 15 is going to go to overbought. And what happens later as we continue with this, my 1 hour hooks and crosses as we go a few hours down the road. And I see a 1 hour hook and a cross. Then expect the 30 minute is not only going to turn hook and cross, but start to navigate toward overbought. Yeah, it too might engage, disengage, engage, disengage, but nonetheless cycle to overbought. And these are going to cycle to overbought. All I need is what? A 1 hour hook and a cross. Then my 4 hour. Once my 4 hour finally finishes the down cycle and we get a hook and a cross up on the 4 hour, then it means this 1 hour is not only going to turn and hook up, it's going to go all the way to overbought. But be careful. Right now, the 1 hour could turn up and slingshot back down so the 4 hour can finish. So what I mean by that is, Lynn, expect it's going to go all the way to oversold. Then when it hooks, I want to buy it. Well, what if in the next couple hours it starts engaging back up? It's likely to fail like it did the last time. Engage up, fail, go back down, right? Watch my cursor. Engage up, fail, go back down. So it finishes the cycle, but whenever it finishes the cycle and I see it turn and hook, buy that. Because now my daily has the opportunity to then slingshot higher, and we go from a higher low, higher high. Where's a good place to buy from? If I get a 4 hour PAI hook, I'm buying it. But a good place for price to go down to on Ichimoku is this goal line right there. And it's roughly about, let me move my red cursor out of the way. It is roughly 73.20, so about 20 points. Does that mean we could go down 20 points before we slingshot higher? Sure we could. And we're definitely likely to do it should my 4 hour finish the down cycle, what it's likely to do. But intermittently, we're going to get a little bit of a bounce, right? We just said that. But that means we're expecting this to bounce, but slingshot lower. Bounce, slingshot lower, bounce, slingshot lower. All right. So in closing, there you got a very in-depth review, and this is nothing compared to what we do in class. But just to remind you, sign up now. You'll have your software. You can have everything loaded and ready to go by Tuesday's class, which starts at 8:30 a.m. Eastern. And we cover everything. So if you want me to look at a particular symbol, like we just did for the NASDAQ, you type it in and we look at it during class. All right, so in closing, gpatrading.com/amember/signup/monthly297. You have the link, you click on it, and what I'll leave you with is we've had this service for over 8 years. 90+% of our members have been with us, Scott, not for a month, not for a year, not even for 5 years. 90+% of our membership has been with us from the beginning. Now, the reason they stay is because it works. That's why. So join us. Take care. God bless you. We'll see you Tuesday for those of you that have joined. And if not, please join so you can be that part of our Tuesday class. And I can assure you this week there's some great trades setting up. I've introduced you a few of them. Some you should be in right now because they're going to go higher. And we just discussed that. So, all right. I appreciate your time and attention. Thank you. Take care. And we'll see you down the road.